This is Krishna Kumar GV. Welcome to my financial literacy program. In this video, I'll be explaining to you about the gross domestic product or GDP and also about the per capita income. I'll be explaining to you what is meant by GDP, what are all the major components of GDP, and what GDP indicates. And I'll also be explaining to you about the per capita income, how the per capita income is calculated. Now, let us try to understand what is meant by GDP. In simple terms, gross domestic product or GDP means the total goods and services produced within the country. Now let us expand it little bit. GDP or gross domestic product is monetary measure of the total value of goods and services produced in a country during a specific period of time. Supposing if any goods or service do not have monetary value, then that kind of goods and service will not be considered for calculating the GDP. Secondly, GDP is calculated on a specific time frame. Normally, GDP is arrived for every year, financial year. Sometimes we also calculate GDP on a quarterly basis. In the previous slides, we understood what is meant by GDP. Now, let us try to understand how the GDP is calculated. GDP has got five major components. First one is the consumption, second one is the investment, third one is the government expenditure, fourth one is the exports, and fifth one the imports. Consumption is the total goods and services used by the population of the country. The second one is the investment. Investment in plant and machinery, housing, etc. will also be taken into consideration while calculating the GDP. The third one is the government expenditure. As all of us know, the government is the major spender in the economy. Government will be spending lot of money on welfare program for which goods and services manufactured within the country is being used. Then comes the exports. Exports are the goods and services we send outside India which is manufactured within the country. If we add these four components and deduct the imports, we will be arriving at the GDP of the country. Why we need to deduct imports? Because imports are the goods and services manufactured outside India and not within the country. In the previous slides, we understood what is meant by GDP and how the GDP is arrived. Now let us understand what it indicates. GDP explains about the overall health of economy of a country. It explains about the size of the economy of a country. We say America is the world's largest economy is based on the GDP of that country. China is the second largest economy of the world based on the GDP of that country. India is the fifth largest economy at present based on the GDP of our country. The largest economy need not be the richest economy. The richness of an economy is arrived by the per capita income of that country. Per capita income is a measure of the average income earned per person in a given area in a specific year. It is calculated by dividing the country's GDP by its population. If the GDP of a country is very high, but the population is also very high, then the GDP per capita income of that country will be low compared to the countries with the lower GDP and lower population. Hope you have enjoyed my video. If you like the video, please share it among your friends and associates. If you have not yet subscribed to my channel, kindly subscribe to my channel. Thank you. Thank you once again for watching my video.